It's
Hi.
lovely to have you here. So yeah, over to you then
Yeah,
if you want
thank
to
you.
if you're ready.
Look, I've worked in 1 minute about me. I've worked in SMEs and corporates, but I've worked in SMEs for about 40 years. And thank you very much. I know I don't look that old, but I started very young. Um, and what I've seen throughout my career is actually that my profession, the accounting profession, doesn't always support SMEs very well. The compliance accounting is really important. But actually, I've worked in a lot of businesses where the in-house finance function um, has either worked brilliantly and had a real impact on profit, cash, and on the value of the business. And I've equally worked in businesses where the finance function hasn't been utilised, it's not been resourced properly, and as a consequence, information hasn't been available and the business hasn't done as well as it could. So my whole purpose is about helping business owners be more successful and feel happier. And I've got a team of 80 very talented finance professionals in my team that exactly help me live my purpose. And we've been doing this 20 years now. So that's enough about me. I suppose why Ollie and Dan asked me to come talk is that who wants to learn about accountancy? Hands up. Oh, Dan, you better leave because it's not what this is about. And who wants to be an accountant? Me. But when we start our businesses, we don't ever really want to be accountants, right? We're really super brilliant at whatever it is that we're super brilliant at and whatever we're building our business around. But when we run a business, we're expected to know everything about everything, aren't we? And that piles on a load of pressure. And what I know, just for myself as a business owner, is when I try and be the expert in everything, usually that gets very frustrating for me because there are things I'm not great at. It tends to take me a lot longer. I tend not to do a very good job, and that slows the business down. That's what I know. And what I see when I speak to business owners is I hear those same things coming from their mouth when they go, "Oh, I never do my accounting. I haven't got any numbers. I don't know what my cash flow's like." They don't usually sound like that, by the way. But I have sat in the Holiday Inn in Guildford with somebody crying on my shoulder because they thought they were going to have to shut their company down, following some not very good advice. So today, I'm just going to help or share with you what's going to come on your scaling journey and how you can make sure that your accounting function is having a really positive impact on your profit, your cash flow, and your valuation. Because that's the only thing that the accounts function is really there to do. And if somebody's trying to tell you that they're there to do something else, then they're fibbing or don't know what they're doing. Does that sound like the kind of in-house accounting function you really want? Well, let's hope so. I think when we think about bookkeeping and in-house accounting, what we really think of is somebody that's locked in a cupboard somewhere, looks a bit like this person, less physically now, but I do remember walking into a business that looked a bit like that. Um, and obviously their cash flow wasn't as good as it could have been. They weren't really making very good profits, and everything was a bit chaotic. But even though we don't really do paper anymore, it's very easy for a finance function to get into a place like that rather than something that looks a bit like that and is there to give you information. But let's talk about the journey that you're going to need to go on, because there's one thing that is true. What got you to where you are today is not going to get you where you're going next. As we scale businesses, our businesses change. They go through step changes. And that step changes everybody. It is in every area of the business, not just accounts. And actually, it's in us too. We go through step changes as we learn and grow and make mistakes and look at things that we do brilliantly. We grow as well. And that journey that you're going to go on When we start our businesses, it's us doing the billing and paying the suppliers and doing sales and doing everything. And our accountant is the person that says you need to register for VAT or not, and does our year-end accounts and keeps us out of jail, which is brilliant. As we begin to grow a bit bigger, it becomes us, our accountant, and somebody else. Usually an enthusiastic contributor, maybe a member of the family doing the bookkeeping, or maybe the accountant refers us to somebody to do bookkeeping. But as you continue to scale, at some point, you're going to leapfrog the bit in the pink and you're going to have a full-time finance function. Now, I want to give you an example of this in a minute, of a business that we worked with that did just that. But the difficulty is where this pink area is, that's a massive gap. So that gap between you doing stuff, and quite frankly, if you're doing anything in your accounting, there's better things you could probably be doing. If you're doing any accounting, if you've got an enthusiastic, reasonably able-bodied person helping you, what comes next? Well, what comes next is what I'm going to show you in a minute. But I want to give you an example of one of our earliest clients. It's a business called White Label Dating. And I started working with Ross at White Label Dating. He was actually a customer of a business I was working in. Sorry, a supplier. And he rang me and he said, Jen, your boss speaks so highly of you. I felt I needed to reach out because I think I'm going to prison. That's how the conversation started. And I was like, okay, why do you think that? He said, the VAT man's coming. And it's like, okay, well, I'm sure it's not the first step going to prison. So let's come and have a look and see what you've been doing. He actually had two businesses. And the turnover in the business was a couple of 100,000. And the VAT man did come and we sorted a few things out for him and got all of that working. He didn't go to prison, so that was good. And we shared a little tot of whiskey once the VAT man had left the building together. And I started working with him a couple of hours a month. He was my love project. Well, not him, but the company. But the business scaled and grew because once Ross got a bit of visibility of where the money was being made in the business, and once we had a look at how his platform was billing, within 3.5 years, he was at 22.5 million. And he was able to get that scale because he had a financial controller looking at how his platform, he was developing his platform, developing his billing platform. Now that 22.5 million was on an average ticket price of 24.99 a month. But by him not having to get involved in the financials and him having access to really good information, analytics around what partners were driving the growth and what products on the site were driving the growth, and the billing working without anybody having to touch a button, he was able to release some cash that he then reinvested and then was able to scale that quickly. Now, what he was able to do was access expertise fractionally, which is the pink space that you can see on screen at the moment. So we were managing his internal finance function on 3 man days a week. Once he got to about 3 million, up to 22.5. At 16 million, we were screaming. But he grew so quickly from 16 to 22.5. It took us that long to recruit his full-time finance team. So that's a full-time management accountant, a full-time analyst, and a full-time CFO, because that's what he needed at 22.5 million. But being able to access expertise in an affordable, flexible way, because there was a lot of change from that 200,000 to 22.5 million in how we structured the finance function. But we made sure that the finance function was always delivering that intelligence that helped him invest properly, invest his money and get the returns. So that's where fractional comes in. But where do you start when you're building a finance team? Because I've said it's you're an accountant and an enthusiastic helper, and then to the full-time finance function. Let's see how we grow that. We always build from the bottom up. You need really solid foundations. So how you build a finance function is you need somebody in the green level layer, the foundation, somebody doing all the bookkeeping, fingers on keyboards, managing the ins and outs of the money. If you can see the bit at the side, hopefully the font's big enough, you can see what each of these individuals does. So there's a good way and a bad way of doing bookkeeping. A business that we went in and did a review with, we looked at how they were doing all their day-to-day stuff. They have two people in the function, and we looked at how they were doing it, when they were doing it, and who was doing it. And we saved them, by the people that were doing the work, 25% of their capacity in their accounts team by improving and streamlining how they were doing things internally. But the bit that made the real difference to this second company that I'm talking about is it put 200K in their bank account. So just by making sure the bookkeeping's being done properly and the right way with the right focus, that often has an impact on cash. So you start with getting the day-to-day sorted with, we call them finance managers rather than bookkeepers. Then you start to build up. The next piece of the capacity puzzle that you need is you need a financial controller. Now, nobody really knows what a financial controller does. And that's okay. That's our problem to solve, not anybody else's. But a financial controller, I'm a little bit cheeky. I call it the fat controller, because really the financial controller sits in the middle of the accounts function and makes sure everybody's doing what they should be doing, when they should be doing it, how they should be doing it. They are the person that sits in the signal box and makes sure all the trains are in the right place at the right time and going in the right direction and not crashing into each other. Andre, you have a question?
Jennifer, at what stage in terms of income generating do you think you need a financial controller?
That's a really good question. And the answer is it depends. What you'll see when you need, rather than thinking about size, because you might need a financial controller if you're running a tech business and you've got a couple of million quid in funding, you already need a financial controller. And if you haven't got one, you're late to the
Yeah,
party.
agreed.
But you can be a £2 million turnover business and not need one. I would say probably starts about the million quid. But what it actually looks like is it's when the business owner doesn't touch every transaction anymore. What we see is when the business owner doesn't own every sales deal anymore, when the business owner is not managing every project anymore, that's when margins start to deteriorate. Because let me tell you, and there's a lot of management books out there that will tell you something different. Staff do not look after the business money anywhere like you do. They just don't. They're employees for a reason. And you can train them and you can improve that. And you can give them some ownership in the business and things like that. But essentially, if you're still the major shareholder in the business, except for probably your bookkeeper, the only person that cares about the money like you do is you.
But does that not mean that you've still got to sort of keep an eye
Yes.
on
Ah,
who's spending what?
so that's a really
Because
good,
if
yeah.
you leave it to their own devices, they're
Wow.
just going to be spending money, and then you're going to end up looking at the accounts and you're going, "What are you spending that money for?"
There you go. So this is part of what the financial controller does, because how you described that is perfect, Andre, because what you said was, I've still got to keep an eye on everything. Yes, you have, but you do not have to be the person going and looking. The role of the financial controller is to get those controls in place. Can that person buy a burger on their company credit card? That's not your job. It's your problem, but it's not your job. And the thing is, a financial controller is the person that looks at what authority levels do people have? Who's policing that? I hate the fact that finance are police people, and sometimes they are. But it's not about holding the business back, it's about protection. As you start to grow, you are going to run out of capacity, personal capacity. And the bit then that gets done at the weekends and in the evenings, that should be family time, time for you to refresh and recharge, that tends to be when you know you need somebody to help you with this. Because actually, at some point, you need the business to be giving you the information, not you going and finding it. That's the gig. So if you're doing a cash flow forecast, you need help. If you're pulling together budgets on your own, trying to put that in a spreadsheet, you need help. If you're phoning customers and doing credit control, or nobody's doing credit control, which is chasing your customers for payment, you need some help. And there's ways of doing that. If you're trying to figure out what the return on investment of your different marketing spend is, you're more talented than that. You're better than that because there are other things in the business that only you can do, and it's not finance. That's
Your white label man, your
yes,
white label client,
yeah,
right? I assume that that was a tech platform,
yeah. It was a tech
right?
platform.
So doesn't all the money
Mm,
come through, a payment system? So you're not actually ever, contacting the customer directly because
yeah,
you've got the systems in
not
place at the back end.
yeah. Not all businesses need credit control. On the tech platforms, less so, and you often bill in advance. Although we did accelerate white label dating's cash flow by 30 days, because nobody had had a proper conversation with their payment supplier and collector. And there are lots out there nowadays. So it's knowing which one's right for you at the right time. But I see a lot of businesses that aren't tech platforms where nobody does credit control. I'm going to tell you a story about another client that we've worked with, Cruster. When we started working with Cruster, they were turning over, I don't know, 250K maybe. And they sold to about 250 customers a year. Alex makes amazing products for the hospitality industry. And if you've ever been to a restaurant, um, something around the food presentation will be something that he's designed and he's made. But he's kind of a bit of an invisible brand in the hospitality industry. But we did some analysis on his customer profile that actually came from a problem, which was his customers weren't paying him. The list of customers not paying him was 22 pages long when we went to work with him. Yeah, and there were about only one invoice per customer. So trust me, it was a pain in the bum for me, really, and my team that accelerated us looking at his customer spread. And what we found out was that there were only 3 customers generating 90% of his income. 3 out of 250. The other 247 only ever spent once in 4 years, and the average bill was about 250 quid, if that. And by the way, they never paid. And they took up 70% of both Alex's time and his operations person's time to generate 10% of their income. So because we've done this analysis of his billing, his customer profile, what products were they buying, how often were they buying, what was their average order value, he was able to see. So it's not for a financial controller to tell the business owner, you guys know your business, you know your market. It's our job to give you some information that goes, did you realize Or isn't this interesting? Being an accountant is not about being a policeman, it's about being curiosity cat. So he had 3 customers with scope to sell other product categories too, and he had 3 customers with scope to sell on global into other global regions. So it was an impact of seeing that information. The decision that Alex took was he pushed the other 247 customers through a distributor. He negotiated a better margin with the distributor because he made the deal to say, I'm pushing these customers your way. And once they're your way, you know they're going to buy more stuff from you. Then he focused on his design. So he was originally known as the wooden tray man, but now he's a really respected designer of hospitality food presentation products. But not just food presentation, he is also now in the bedroom of hotels, he's in the housekeeping in hotels, he's in the dining room, but he's also in the back end of the kitchen as well. But he's also now selling to markets internationally. So as a consequence of seeing that one piece of information, the business grew 10 times in 3 years, factor of 10. And he got back to doing what he loved doing. How are we for time, Dan? Perfect. So that's what happens when you get expertise support in this space. And that's what happens when you build a finance function. And a bit of a myth that exists in the marketplace is you've got a bookkeeper, that's great, and an accountant, but what comes next? Oh, nice. Thank you, Helen. What comes next is not a CFO. If you go to the CFO level first, the CFO can't do their job without having the stuff in purple. So you're wasting your money. You really need to build from the bottom up. So once you've got a bookkeeper, if you can't get management information, if you haven't got a cash flow forecast, if you're not looking at your customer spread and got some analytics, what you're missing is a financial controller. So let's give you another story. Let's talk about Skillwise. By the way, I have permission from these clients to talk about them, just in case anybody was wondering. Paul and Wayne at Skillwise. I met them at an event and they came up to me and said, yeah, our wives are telling us we have to go and get a proper job. They've been running Skillwise for about 6 years. They were taking some money out, but not much. They were up against their overdraft. They weren't making any profit. They were reinvesting. It's again another tech business. And this isn't just about tech businesses. I've got another example in a minute. They were reinvesting everything in development. They were like, we don't really know why we're doing this anymore. It's been nice fun, but the family are telling us we need to go and earn our keep. So okay, let's come and have a look. They didn't have any controls around their billing. So they worked with different clients. They had different T's and C's for different clients. So some people they billed in advance, some people they billed in arrears. Some customers they billed monthly. They had some amazing customers. So it's private training platform, a virtual qualification assessment platform, saved training providers 75% of their assessment costs. It's like, and if you're a private training provider, your assessment costs are a pretty big proportion of your total overall cost. So an amazing product and some great clients, RCVS, England Rugby, the Lawn Tennis Association, and the list goes on. So what we did, we looked at how they were doing their billing. We identified about 180 grand's worth of missed billing. We helped them have the conversations with their customers about being paid that and invoicing that. We got a credit control process in place because the person that had been helping them was a friend, an enthusiastic friend, but didn't have any experience in bookkeeping. And they were using about 25 different spreadsheets with 100 different colors in it to try and collect debt. And it's like, why aren't you using your accounting system? They were like, nobody knows how to use it. The accountant does it all at the end of the year. So it's like, well, you're even doing stuff twice. So let's get but the thing is, this is normal. This is what can happen. So we got the billing up to date and a process so that never happened again. We got a credit control process in place and their debtor days shrunk. Paul's on a video on our website and he talks about it. They turned a profit. They were investing 82% of all their income in dev. Devs like the platform to be perfect, but it was helping them understand what the ROI was on their development and to get into a technology roadmap that they could afford to invest in. They started getting paid. The families were happier. They were happier. And Capita approached them to be acquired. And Capita's feedback was the due diligence was one of the best they'd ever seen. So, by the way, that's not me, that's my team. But this is about having a process and being able to reach into expertise fractionally when you need it. It's what you need when you need. As you scale, you know, I've used fractional people in sales. I've used fractional people in marketing, which are not my skill set at all. And I've used fractional people in HR. I buy my own product, by the way. I also have a fractional finance team. I get really good rates, so I'm told. But who sits in the fractional space? Because let's be honest, thank you, Andre. Let's be honest, fractional's really sexy at the moment. Whoever thought accounting could be sexy? Fractional's sexy. Everybody's doing it or say they're doing it. But let's have a look at where the benefits are and where the risks are. So how can you fill this gap? So you've got 4 options, really. You can go and recruit. You can go and recruit. And that's an option, but it can be quite costly. Government's not helping in that. It's not very flexible. So as the business starts to scale, when you're at 1 million, you know you need this. When you're at 3, you need something else. What do you do with that person? Nobody really likes saying, I'm sorry, we need to find you a better home, and we need to recruit somebody else. It's very high dependency. Just flicking back to this other slide, we see this a lot. Business leaders think that having one person doing both the purple and the green is a really good option. It is not. If you recruit somebody in the purple zone and 70% of their job is in the green zone, they're going to get bored real quick and you're overpaying them. And by the way, if you advertise for a role like that, the people who are applying are not the best. Because any self-respecting financial controller who spent 5 years getting a qualification and has worked both in corporate and in SME doesn't want to come and do 70% of their job as bookkeeping. If you've got a bookkeeper or a finance manager and you think that they can do all the management reports, KPIs, modeling, budgeting, all that kind of stuff, they can't. They're learning at your expense. And that's okay. I'm all for people learning, and that's great. But it's about learning in a safe place and you not having to pay for mistakes. But the other risk is that if you only have one person in your finance function, and we've seen it time and time again, there's a massive risk to fraud. I hate saying it, and it sounds like I'm scaremongering, but we went to work for a client who had a self-employed bookkeeper, and they were only getting a little bit frustrated because he was becoming a bit flaky. But actually, when we went in and turned a rock over, it turned out he'd ripped them off for £172,000. Now, fortunately, they were insured. Not all of our clients get insurance like that, so we were able to help them recover it. But we've had a couple of other new clients that we've worked with who have not been insured, so that's also worth looking at when you're running your business. But let's get back. So recruitment, you can do it. But kind of, it's a bit like me recruiting marketing people. I don't really know what good, bad, or indifferent looks like. So I tend to recruit people that I feel I get on with, that I can trust, rather than incompetency. And there's a lot of finance people out there that know how to use the system, but don't understand what the system does underneath. And I'm trying desperately not to use the word debits and credits. Your accountant's a reasonable option. They can be somewhat more expensive. They are flexible. There's a low dependency risk. You know, they can flex as you can flex. The only thing about it, though, is it's not really their bag. Everybody thinks all accounting is the same. I'm going to go back here for a sec. You'll see in the grey zone, and yes, I did pick that colour deliberately, down the side, your accountant who does your year-end accounts and your corporation tax and your self-assessment, they did a different training course from the accountants who went into business. So when you qualify as an accountant, you can choose to go into practice and you do audit and tax and IFRSs and all that kind of stuff. And that keeps everybody out of prison. But there is a different stream of accounting where your qualification and your studies are different. You study business strategy, you study marketing, you study a bit of law, you study financial reporting and analytics, and you qualify in that instead. So your accountant may not be the best person to help you get your finance function running properly, because it's a bit like a plumber and electrician. Both involve moving energy from point A to point B, but I definitely wouldn't want my plumber doing my electrics, or probably vice versa, actually. Let's have a look at the independent. You can go and recruit a fractional person who's on their own. That's okay. There are plenty of very good people out there, but there are also plenty of independent people out there who perhaps aren't so good. But the main thing is that you run the risk of dependency again. I was taught in my very first job by my finance director, David Lambert, that I had to build my function in a way that meant if I got hit by a bus, the business just carried on. And I'm really keen around that dependency. A lot of the ways that we work for a client are built to remove that risk of dependency. So it can be high dependency, can be capacity. Their other client gets busy, suddenly they've not got the time for you. But there are fractional brands, and yes, we are one of them. But we are one of the original ones. So we have been in business 19 years, and we have a best practice, which I'm not going to show you because I haven't got it in this deck. We've got a 12-point best practice that sorts out and elevates every part of the finance function from a commercial perspective, great management information, great KPIs, great metrics that are suited to your business and your industry, great data analytics profiles, great management information, a way of being able to join up the cash flow forecasting so you can see what's coming. Great operational best practice, what tech is right for you. Xero isn't right for everybody. It's brilliant, but it isn't the right product for everybody. But we partner with QuickBooks, Xero, and Sage so that we can access and build something that's right for you. We have a best practice around controls and policies and processes, but we also have a best practice around the day-to-day bookkeeping. So the financial controller leads that building and best practice in your business, because you haven't got the time. You're too good to be spending time trying to build a finance function and trying to get information and working on cash flows. As you begin to scale, you can access a bit of a really brilliant person who's also managed, so you don't have to manage them, to help you with this stuff, and you buy as much as you need when you need it. That's the gig. I think there was one thing that I was just going to share. This just challenges. The main thing that I see is constraints on business leaders' time, and then on knowing where to start or how to do it. You know, if we're not expert in something, it takes us much longer. But that was it, really. I did have a really clever slide in here that I was quite proud of. that's got some stats associated that I can't remember them off the top of my head, so I'm just going to cheat. I'm not a Formula One nut myself, but it's a really great industry to identify and show people how analytics can help you move forward. Because winning in Formula One is all about marginal gains, very small marginal gains. But McLaren in 2023 did the whole tyre change thing. In 1950, that was 67 seconds to do a tyre change. In 2023, McLaren brought it down to 1.8 seconds. It'd been sitting at the 3 to 5 seconds for ages, really, really ages. But they did that by analysing data. I mean, that has won them. That one thing, looking at that one thing, has won them more Formula One championships than anything else. And that's the power of the marginal gain. You might think 67 seconds to 3 seconds, so what? But what they needed to do to shift from that 3.2 to 1.8 was massive. And this is what running a business and being more profitable and having better cash flow is all about. It's not about having a magic wand or a pair of ruby slippers. It's about continuous marginal gains and having somebody that can help look at where your profit is really being made around your sales is the thing that's going to help you move your business forward, and someone who's going to care about the money as much as you do. I hope. Has anybody got any questions? But please ask.
No, I think that's really good. And just from personal advice, or not, but advice from experience rather, sorry. I run two businesses. One is a travel group, leisure travel tour group, and the other one is a customer experience consulting business.
Right.
And it's very interesting. So obviously with the travel group, we're exchanging much larger sums, and we've got lots of suppliers, and it's a lot more complicated. Whereas with DAP consultancy, where it's just me as a consultant,
Yeah.
but I still have an accountant. And the reason why is because when I first started it, it's a limited company.
Yep.
It was stressing me out so much. I was going to bed at night, worried about getting something wrong, hearing all these horror stories that
Yeah.
you miss a penny and you get an 80k fine or whatever it may be, like whether it's urban myths or truth, I don't know. But it was
Yeah.
stressing me out so much. I couldn't focus on getting new leads, new clients, all of
Yeah.
that stuff. So I bit the bullet. And to start with, I was probably paying most of my profits were going to the accountant in year
Yeah.
one. In year one, that was,
Yeah.
but I didn't mind because it made my life much easier. And it's
Easier.
not just about what numbers are on a page; it's all about life.
Mm.
And if it was creating stress or anxiety, then it's worth doing that. And again, like I said, I'm not an expert in accounting at all. I'm very
No.
creative, and I just didn't want that on my plate. So I think things like what you offer isn't just a business strength, but it's a mental health strength, it's
Yeah, it is.
empowerment, it's everything.
Yeah, it is. When in fact, there's the somebody crying in the Holiday Inn in Guildford is a real story. We had a worked with Adam, who had a business that he'd inherited from his dad, and he was doing brilliantly. He had a fabulous B2B business. It's a tooling business, fabulous B2B, and he started working with a coach who told him he needed to diversify, and he diversified into a B2C business. So he's had his original business and this other stream. The thing is, though, what nobody had done was modeled the cash model for the B2C business. So when you're running a tool case business, and you're selling to the MOD and Formula One and all of those like big things, it's a different cash model. When you're B2C, you've got to buy all the stock up front, because if people are buying online, they want it tomorrow.
Mm,
But also, so you've got to buy the stock, that consumes a shed load of cash. But you've also got to invest a load in online marketing. That costs a load of cash. And by the way, you pay for that up front. And his stress was, I'm going bust. But to go to your point, Dan, he was like, I don't see my kids. I don't
mm.
see my wife. It's our 10th anniversary this year. I promised her I'd take her to the Maldives. And he said, and it's not even about the money. I can't afford to take a week out of the business. And I'm just so worried about everything. I'm not sleeping. I'm grumpy with everybody. I think divorce is possibly coming if this carries on this way. I think I just need to shut the business down.
Mm,
And he and it was like, right, it's okay. And of course, what his in-house bookkeeper was doing was just putting everything into sales. So the minute we were able to go, okay, that's these sales and that's those costs and that's the profit that makes, and this is how the cash flow works on that. And these are the sales on this, and that's how much profit that makes. But this is how much you're having to invest in Google. His daily Google pay-per-click spend was not being covered by the amount he was selling, let alone the profit on what he was selling.
mm,
And the minute he saw that, he literally went, oh my God, I know what I need to do. Thank you.
yeah.
And so okay, he did sell off that stock eventually and he did get some cash, but he immediately stopped the Google ad spend. He immediately didn't focus on that part of the business at all, stopped investing in stock, stopped investing in pay-per-click, focused on building new relationships with people in his B2C business. Because like his tooling boxes get dropped out of helicopters in Iraq.
Mm.
They have to be in one piece when they hit the ground. So he's now trebled the size of his business because he has the time and headspace to go and develop more B2B relationships. High profit, high repeat business, a greater ability to go deeper into those organizations.
I
Much
think
better.
agility is key, and having the confidence to pivot if need be is and having that financial advice, not just your own feelings, your own gut, but having that backed up by
Yeah.
data, and
Yes.
that's really that's makes it a difference, doesn't it?
Yeah, that's often the case. And the thing is, I'm so in awe of anybody that runs and has started and runs their own business. Because as a business owner myself, excuse the language, it's fucking hard.
Mm, it is hard work.
Sorry, you might have to clip that bit out of the video or leave it in, I don't care. But it is hard, and I think we all deserve a gold medal, frankly.
I agree.
But if nobody ever trains to be an accountant, nobody ever gets trained at school how to manage money or build a cash flow forecast. I can't do what you do, but I can help with this bit.
Well, I always have a thought. Like I said, I'm very creative. I'm good at conversations,
Yes.
good at deals, that sort of stuff. But accountancy, like I said, is not my strength. But I'd always look at. I'm not a big football fan, but I use this analogy quite a lot. That if you had a football team full of attackers, you would lose. A football team full of defenders, you would
Good
lose.
news.
A football
Yes.
team full of goalkeepers, you would lose. But you need a nice balance of each.
Yeah, and I think my criticism of my industry, because I do hate my industry actually, and my profession, is we seem to lack this ability to be able to talk about money with business owners in just normal English.
Mm,
We've developed a whole language in accountancy that nobody else understands. Creative people, technical people. I have marketing people that talk to me about stuff that I really haven't got a clue what they're been talking about. And and it's irritating because we can feel a bit stupid, not good enough. I should know this stuff and I don't know this stuff. And somebody's just holding the mirror up all the
mm,
time, aren't they? So part of what we do when we work with clients, part of our job is to give you information and intelligence in a way that resonates with you. Whether that's sometimes that's pictures, sometimes that's data, sometimes that's a story, but it's it's not about being patronizing. It's just about saying, do you know what? It's a very small minority of the world that talk accounting. So why don't we just get with the program and join everybody else?
mm. And I definitely need to have a conversation with you at some point. I've sent you a LinkedIn connection. We'll have a
Thank
chat
you.
because there's certain things that yeah, we can chat offline that I might need your advice and help on in maybe not well now or in the future. We'll see, but it'd just be good to have a little virtual coffee
And
basically.
yeah, and also that offer's open to anybody. So look, I'm not very good at selling. I'm like to do things for free. My sales team hate me for that. They don't let me on sales calls anymore. But you all know where I am. I mean, that email address will find me. It's not my current
Yeah,
email
there's a
address.
post out as well. So
Yeah, there you go.
have
Just
a there'll be a
come find me. If you've got questions, I'm happy to answer them. Just the brain is here to be picked.
cool. Any well, lovely to see you, Deborah and James as well. Any questions from you guys before we wrap up? Are you all good? Oh, and Peter as well.
I'm all good. I was just seeing if I could find you on LinkedIn, Jennifer.
Oh,
If you go onto the
let me-
Startup to Stand-Up page and look at the most recent post, Jennifer's tagged in that, so you'll see.
oh, nice.
Cool. All right. Yeah, I'll look you up on LinkedIn. It's not a conversation for right now, but I've really enjoyed the presentation. I think it might be something we could talk about in a few months, maybe.
Yeah, that's absolutely fine. No panic, no rush. I'm here when you're ready. And I hope I haven't taken up too much of your day today, but have an amazing Friday.
Hi,
Deborah's got
Jennifer.
a question
I
quickly.
was going to say, so I'm going to reach out to you and I'll probably send you an email or something because according to LinkedIn, I've maxed out on how many requests I can send out for the week. So I'm going to send you an email because I don't want to forget. But definitely as someone I want, I'm trying, yeah, if we could have a quick catch up. It's
Yeah, of
someone that
course.
I work with and for interesting relationship. But their issue, I think, is around that. And it's the type of business they run. So it's supported accommodation, which is a type of care home,
Yeah.
regulated by Ofsted, and the information about whether they should be whether they should be charging VAT or not.
Yeah.
And I don't want him to get
Cool.
caught. Yeah, I don't want him to get caught by thinking, because up until now he's been running about 7 years, that registered. He's
Right.
come Ofsted registered last year, and there's various people in WhatsApp groups saying, "Oh, you're exempt now." And I'm like, let's check,
Yeah.
let's just check, because I think it's nuanced.
Right, it is. That's the gig. Sometimes when it gets to VAT, it's nuanced. So
Mm,
the other thing is Google, GPT, Facebook. I'm part of a Facebook group called Bookkeepers and Accountants UK, and I
mm,
haven't been kicked out yet. I think I should have been. Um, but there, for such a regulated industry as accounting, there are a lot of enthusiastic, unqualified amateurs.
mm. Yeah, that's what I said to him. I said,
And
please check.
and I'm frequently in that group where people are going, "Oh, I've never done this before. Can somebody tell me what I should be doing?" And my response is usually, and I'm charging a client, he's asked me to do this and I'm charging him, but I don't really know what I'm doing. And I'll let you imagine what my post
Yeah.
to that might
Shouldn't
be.
really be selling that service then, really.
Just God's sake. Refer it to
Mm.
somebody who actually knows what they're doing. So, and also, Deborah, if I can't help your person, I'll know somebody that can, and I'll be able to pull in a favour.
Yeah. Yeah, that'd be brilliant, because what we need is someone that understands not just the financy side, but as I said, that related to care homes and
Yeah,
regulated
yeah,
thing.
absolutely.
Perfect.
Perfect.
Perfect. Thanks.
Okay, peeps. Thank you so
All
much for
right.
your time today. Great
Thank you,
weekend.
everyone. Cheers,
Cheers.
Great as
everyone. Have a
always.
great
Have a great
Bye.
weekend.
weekend.
Have a
Bye.
great weekend.